Hi, I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgren, founding CEO at Lundgren's Capital.
Welcome to Sound Economies with Mel and Peter, an East Meets West podcast by Lundin's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. So, Peter, how are you today? I hope the work week's been kind to you.
Yeah, I'm fine today, and it's been actually an exciting week. We've had a visit from a US asset manager, very interesting. We have one of our alternative funds has opened again for a limited number of investors, so that is generating a good activity. And I'm also
Mhm.
preparing a visit to London next week, a professional visit. So
Mhm.
a lot of things going on, all kind of things. What about you, Mel?
Yeah, it's also been a very exciting week here. So we have several publications lined up. Earlier today, we released our next week in China outlook, which we prepare in partnership with our friends in Hong Kong. And we're also in the final stages of working on our next Global Quarterly magazine. So our subscribers better watch out for that.
Very good,
Peter, we have
very
a lot to
good.
cover
Yeah.
today, right?
Oh yeah.
So some of the topics, just to give a little preview, we're going to talk about China's Mid Autumn Festival. And as you mentioned, there's this US fund with some promising revenue forecasts ahead. And of course, the talk of the town, the Fed's recent 50 basis point rate cut, its impact on global financial markets. And also, we're going to discuss this recent fall in oil prices and whether it's good or bad for the global markets. So, Peter, you gave us a preview, but what something interesting you've seen on your side of the world recently?
Yeah, sort of these many small bits and pieces that we collect all the time. And that was
Mhm.
actually a conversation we had with this pretty large US asset manager. They were here to present one of the funds, and that is a value fund, meaning a bit more
Mhm.
sort of classical stocks they pick and put into their portfolio.
Mhm.
But we were discussing the outlook for the revenue growth within this fund, the portfolio companies. And for this year, they have an outlook of 7% in the revenue growth among these companies. The
Yeah.
most interesting was that next year they have the same forecast, and that is actually
Oh.
for me, sort of a small reality check, saying, okay,
Mhm.
they are actually pretty sort of consistent in the expectations and indicating that it's sort of a no worry view, so to say. No reason
Mhm.
to worry. If they had said, "Hey, look, we think it is going down to 3 or 4%," then it is sort of one of these more alarming bells saying, "Okay, why?" And
Mhm.
certainly, if they had said it would go up to 9%, then I would really have asked into it. Yeah. But sort of the stable outlook is actually okay, and it sort of indicates a certain robustness in the U.S. economy, and of course to the comfort of investors.
Right.
So yeah, what you mentioned the China holiday season.
Right, Peter. So they're just coming off from their mid autumn, or also known as the Mooncake Festival. So the Chinese markets were actually closed last Monday and Tuesday to celebrate what's said to be their second biggest holiday every year, only next to the Lunar New Year.
Yeah.
But despite the supposed holiday cheer, consumer activity hasn't picked up as they expected. So mooncakes, which I think everyone's familiar about, it's supposed to signify luxury and extravagance, and it's the center of the celebration. But baking industry groups in the mainland China are saying that sales are down 6%. In
Mm.
Hong Kong, business activity is supposedly down by 15% versus last year. So
Mm.
it seems that the holiday cheer isn't lifting spirits as much. And I don't want to oversimplify, right? But if
Mm.
anything, if we take mooncake sales as an indicator of economic activity, it's not looking so good. But yeah, In Hong Kong, for example, there's a report that hotels aren't at full capacity, even if this season is supposedly a day or several days of where people travel to reunite with their extended family and celebrate. So yeah, it if anything, this could capture the continuing trend that consumption demand and willingness
Mm.
to spend among the Chinese aren't hasn't recovered yet. It's been persisting in the past couple of quarters, and our next week in China outlook stated, it's looking like third quarter growth could be even slower than the 4.7% from second quarter. And yeah, so let's see how and if they can boost consumer demand from here
Yeah.
on, but the signs aren't looking so good so far.
No, no. So Mel's mooncake barometer is pointing a bit downwards. Yeah.
Yeah.
But it sounds like something like quite funny. But a mooncake is a very fine gift in China, and
Yeah.
rightly, it is interesting this because these holiday seasons or short holiday breaks very classically have been the indicator for how is the consumer mood, as a simply how much money do people spend, as you
Right.
mentioned, travel, buying gifts like mooncakes.
Hmm.
But I have a question after all,
Yeah.
because it's well known that Chinese consumers are actually one of the most active online shoppers. In
Yeah.
2023, the
Hmm.
online share or the e-trade share of the total retail sales amounted to 27.3% of the total sort of consumption. So
Right.
my question is, where we for like years back always looked these holiday
Mhm.
season figures, is it so that the sales, the consumption simply is suddenly flattened it out because people they buy online when they need it? Or is it so that we think that people are doing more online shopping also during the holiday season? So we can still sort of have the holiday season indicator, the mooncake indicator, at the same
Mhm.
level as earlier, or is a sort of a difference today? What do you think?
Right. So I actually came across an article from a state media website where they're saying that searches for like mooncakes and family feast group meals are up relative to a year ago, but didn't really mention a lot about growth in sales. And
Mm.
there, I also came across this article saying that, yeah, mooncakes are fancy. They're what you give to your loved ones because it's the highlight of the season. But at the same time, people are actually taking the price as a little too high, and they're baking their own. So if there's if that's any indication, maybe people are comparing what's the cost of this online or what's the cost of this when I dine in, and then they end up those who are reluctant to spend, they end up preparing their own meals, baby baking their own mooncake. So yeah,
Mm.
retail sales are whether online or in the restaurant, it's looking like it's declining, and it has been for the last 2 years. So this is the second straight year already when mooncake festival sales are lower from the previous year. So
Yeah,
the signs aren't so optimistic currently.
yeah. So yeah, so it sort of basically uh, supports the view we have on the Chinese economy and also
Mhm.
basically the Chinese stock market, that
Mhm.
um, there will be even maybe a bit headwind from the macro level towards the stock market. If China should move forward, the consumption needs to grow quite
Right.
actually. That would be due to reforms or try to activate spending, and that
Mhm.
is a political job. We don't see it happen. So when it comes to the stock market, we focus still on the companies, but particularly what we call the private sector, that
Yes.
are priced at a very interesting low level still. And there are a lot of interesting companies there. But it's how we look at it. Investors need to be very selective. But China is moving forward. That's not the question. It's just not sort of getting the tailwind from
It
any
is.
macro. Yeah.
Yeah.
So interesting. So it basically confirms the view that can be good and bad, but it's no mooncake cheer. Yeah.
Mhm.
But there were cheer on the other side of the globe, so to say, in mid this
Right.
week.
Yeah, speaking of Chinese stocks, they're despite this persistent weakness in consumer demand, Chinese stocks were actually up this week, although
Mm.
trade volumes are low. And this optimism isn't as much as cost domestically, but of course, by the Fed's 50 basis point rate cut, which it announced last Wednesday or Thursday Asia time. So it's been driving the relative strength of Asian currencies and Asian stocks. You correctly predicted, Peter, a 50 basis point cut, right? From like two podcast recordings ago. So,
Yeah,
what do we think about that, Peter? How is it affecting global sentiment?
yeah. As we also talked about at that time, first of all, extremely interesting if it would be 25, 50 basis points, but also the wording surrounding the
Yeah.
rate cut. And that was sort of, when we talk about 50 basis points, yeah, there was a
Mhm.
risk going for that forecast that Fed would say, okay, hey, we are cutting huge because we actually are concerned about the labor market, it's cooling too much off, or we can see too many of the economic data coming out that is slowing too much. Yeah. But the good
Yeah.
news, there was actually, I would say, comforting wording from James Powell about the U.S. economy. They're not concerned, and
Hmm.
they are very good in communicating. Fed, they should be praised for that. But
Yeah.
they're sort of the guidance is they're okay, and what they actually indicate with a 50 basis point rate cut, in my
Hmm.
view, is now we are really starting to see um, maybe a more steep rate cut
Uh-huh.
session than had been expected. And that is simply to get the rates back to a bit more what we call maybe neutral level.
Yeah.
And that's very positive. It should be comforting for financial markets in general. So it's not sort of that the risk outlook for US is growing so much. We
Right.
do notice that
Hmm.
there might be some slowing down, but we see U.S. economy as robust and flexible, and also that the U.S. economy is still so flexible, and that is contrary to the European economies, that
Yeah.
the U.S. economy is actually reacting on monetary policy, meaning when
Mm-hmm.
interest rates are going up, it slows the activity in the economy, and now rates are going down. That will at some time sort of help the activity generally in the US economy. I don't know if we can, Mel, sort of put up a particular fixed point, but another 1.5% is probably where we discussed, okay, is that where it is really sort of that it makes a difference for the US economy. So it
Mm-hmm.
means it will take. We are looking into Q1 next year, but it's not that far away, and we're happy, I'll say, right?
I think definitely it won't be as fast as how they cut during the pandemic year of 2020, right? From a 1.75% in January, they pulled down interest rates to 0.25%. So it's
Uh,
not going to be in that magnitude of, for sure, because that was an emergency scenario. But
mhm.
so the discussions are now shifting towards like, so what's the next move going to be? What's the size of the cut, the next cut in November?
Uh,
And their markets are discussing again if the 50 cut will be followed up by a cut of a similar size, or will they take it slow and maybe do a 25 in between and before taking another 50 basis point cut?
The-
What's your take on that?
right now, we're going for 25 basis points.
Uh-huh. I agree. I agree.
Yeah, so of course, the biggest indicators we look at is actually the wording from voting
Mhm.
FOMC members. In the
Yes.
monetary policy, there are voters and non-voters, a bit special. That is one important indicator, and of course, then we look at the economic data. If all of a sudden that things starts to move too much downwards, then that
Mhm.
would be 50 basis points. But then I would say it might be not so happy. So the best thing that we could see right now is a 25 basis point.
Right.
Uh,
So, and I also picked up from the Fed's statement that they're clearly more focused about the job situation more than the inflation rate. It's true that inflation has trended lower, although still slightly above their 2% target. But Powell has been very worried about the unemployment rate, which is which has remained above where they're used to. I think pre-pandemic they were at 3.5, 3.6%. Now it's at 4.3% in July. And that was really, I think, what made a 50 basis point cut their choice, their obvious choice, apparently. So
yeah.
yeah, I think that's the more important data point to watch out for in the next few weeks.
Mhm. Yeah, sure, agree. Good, but oil can help a bit, yeah. The oil
Yeah.
price.
Correct. So we've seen a decline in oil prices in the past couple of days. There has been quite a few rollbacks in like pump prices in the past 2 weeks. And I
Mm.
wanted to know is do you think it's a good thing or a bad thing? Of course, it's a good thing for some people and bad for some, but in general, how do we view this, Peter?
Yeah, it's of course always interesting when the oil prices are sort of shifting, and they do
Mm-hmm.
go up and down. It shouldn't scare us too much, yeah.
Yeah.
But of course, we notice when it happens. Why is it happening? And that's an absolute fair question. And we should say for almost 1 year ago, actually on the
Yeah.
27th of September, the Brent oil, and that is the North Sea oil that we like to look
Mm-hmm.
at that price here in Europe at least. It was trading at $92
Mm-hmm.
per barrel, and now it's trading at 75. And
Right.
the interesting thing is this shift will now soon come into the yearly inflation rate, yeah, because
Mm-hmm.
this will take inflation, headline inflation lower. Of course, we can easily look at inflation without oil, and there's also the central banks they do that as well, but they
Mm-hmm.
also look at the headline inflation because this will be sort of after all the inflation that people see and feel, and there is also the inflation that is up for discussion. So it means something. This will mean it's not an argument for also the European Central Bank ECB to cut rates further, and also for the Fed. So that is interesting timing. First of
Mm-hmm.
all, again, as you said, the drop lately is also significant because, of course, it's been going up and down, but just in July, like 2.5 months ago,
Mm-hmm.
uh, the oil price, the Brent oil, was up at about $85 again.
Mm-hmm.
And now, again, it's trading 75. And for just 1 week, 1.5 week ago, it was trading below 70. So
Right.
why is that? And it should be said that the American oil price, the West Texas Intermediate called WTI, is
Mm-hmm.
similar to in the swings like the Brent. There can be some supply differences, but basically it's the same. So it is a good global measurement what we're talking about.
Mm-hmm.
And of course, what we look into, what we discuss, Mel, you and I, is demand all of a sudden dropping? Is is
Yeah.
uh, is, uh, is should we be afraid? Because the latest weakening of the oil price
Mm-hmm.
is remarkable, and it has been stated by the both OPEC and the International Energy Agency
Mm-hmm.
that the demand is forecasted for this year and next year not to be rising so much as expected. But the key
Yeah.
is the demand for oil is rising. The demand for energy is rising. So it
Mm-hmm.
means that if we use that as an activity measure, it's still going up. But
Mm-hmm.
again, demand in the advanced economies, what I also now and then call old economies, is
Mm-hmm.
flat. And then we come back to China again. And
Yeah.
it just shows how much China actually just has of importance. That
Yes.
at the best, the demand from China is flat, but actually some of the distillates like diesel is shrinking, and that is
Yes.
also a sort of an indicator of sort of slowing activity. So where the rising demand comes from, that is your area, Mel, as a let's
Mm-hmm.
say emerging markets as overall. Um, so it's still sort of emerging markets where we see the rising activity, rising demand for energy, also for oil. Is that
Mm-hmm.
sort of what you when you look into the figures for Southeast Asia, does that sort of comply with what you see?
Well, actually, yeah, a lot of the decline in consumer demand, including for commodities like oil, is really pinned to weak Chinese demand. And of course, the sheer size of their economy is showing its effect worldwide. I'm also thinking, is it possible that a part of this decline in oil demand is also due to the fact that people are considering or shifting to EV, electric vehicles, and maybe that's easing some of the demand. Although, of course, the unwillingness and the weak economic activity is, of course, at the bottom of it all. So, um, for example, a country like the Philippines, we're mostly just a small open economy and we're just taking the cues from elsewhere. But yeah, if you see something, an economy like China that's been slowing down in recent quarters, it's not unexpected to see that fuel prices are going down also as a result. Yeah, so that's something to look out for. Um,
It is, yeah. So we take it as another sign. Also say
mhm.
the main reason as industrial production of manufacturing across the globe is under pressure here.
Yes.
So we see
Yeah.
um, part of these classical energy consuming areas uh,
Mhm.
they're under pressure, and we still see sort of course the global economy is growing, but it is sort of we see the growth as very slow, yeah. And this is
Yeah.
actually a part of what we see of reflected in the oil price. Another
Mhm.
explanation is simply oversupply.
Ah, correct.
The production is higher than sort of also simply where the demand growth is. But the
Mhm.
reason for the lower demand is a bit headwind economically. So we notice it, but
Mhm.
it's just a small thing, but enough of how to say it, movement in the oil price that we react and we consider why. So far,
Right.
we just acknowledge, okay, mm, demand is not rising as much as expected.
Right. And let's move to our discussion on how is all this affecting our view on the global markets, on the financial markets particularly. So, are we still comfortable with the risks and opportunities that we're seeing, Peter? What do you think?
Yeah, here from this, how to say it, the old economy part of the world, the
Mhm.
transatlantic part. We're happy with risk still, as a
Mhm.
being more allocated to equities than a neutral position would be, being more allocated to longer duration in bonds,
Mhm.
also being more allocated to some certain fixed income areas like emerging markets, In particular, we like your area, the government debt from Southeast Asia.
Mhm.
What do you say is it should be supportive with the U.S. Rate cut, yeah?
Yeah. So the same for the Asian markets, particularly for the emerging markets and Southeast Asia, we are happy and we're comfortable with the risks that we are seeing because as we take on these risks, it means more growth. But also, it's nice to note that the Fed move and succeeding Fed moves will provide greater support to Asian stocks and Asian currencies, which we really like. So we are remain optimistic about investments towards this part of the world.
Yeah, so just to sum up and say, okay, across the board, we are, yeah, we are happy with risk and
Yeah,
having more risk than a neutral position would be. So we go happy in the weekend.
right. So, Peter, that's all we have for today. Thank you to our subscribers for joining us. We'll be monitoring global developments and we'll share what's interesting in the next episode of Sound Economies, Mel and Peter on the Global Financial Markets, a podcast by Longines Investor Insights. Thanks for tuning in. For expert insights on the go, download the Longines Investor Insights app for free. For investors, we offer very exciting and high quality alternative investment funds, including our top rated Mutual China Fund. To know more, visit longinescapital.com.